Mel. Everybody, I'm Cantonese Cat. Hey everyone, Cantonese Cat here. I want to go through a little bit of the market and a little bit of an update after post CPI data release. Sure enough, yesterday I was talking about how yield was looking exhausted, how Tenkan monthly was serving as, flipping from support here to resistance, how it just keeps on looking weaker and weaker and weaker. And sure enough, when CPI data got released, it just only is like a little tiny bit above expectation. Honestly, the year-to-year was expected around 3.4%, and what actually ended up transpiring was 3.5%, so it's just a little tiny bit up. And yet the market reacted very poorly. People really truly sell off bonds like crazy. TLT has plummeted. And the 2-year and 10-year yields have gone up substantially as a result. Right now, the 2-year yield is actually pushing back around 5%. And this is a monthly candle of the 2-year yield, and this is a monthly chart of the 2-year yield. As you can see, I was alerted to what I think this is really starting to turn a little bit more exhausted, turning from being support over here to resistance. Yeah, it did have a little bit of breakthrough. I mean, we only have about 8 trading days into the month here for this monthly candle. Is nowhere near being closed right now. We have 14 more trading days for it to happen. Could just turn out to be one of these big giant wick over here and just end up closing beneath the monthly Tenkan. Certainly is possible, but it does look a little bit less likely because the CPI was hot and because everybody was kind of freaking out about it. So we'll see. I mean, I do think that the yields are a little bit more elusive at this moment, even though I'm not really completely giving up the fact that yields are indeed still looking a little bit exhausted. And that's also not just based on the Ichimoku cloud analysis here. It's also based on the 20-month, the 20-month moving average over here with the Bollinger Band squeezing. The 20-month moving average is really starting to turn around. Last time it turned around, it really started to plummet. And then the time before it turned around like that, you really have to talk about maybe around like 2007, 2008. It really started to kind of change trend, squeeze, and then it changed direction, right? Right now, I think we might be at around a very similar juncture, although it's still positive sloping. It's still going to serve as support here a little bit, but there's no guarantee it's necessarily going to hold up for that much longer. Even though it did break through some of the initial resistance level here, and even though it is still finding support in a positive slope 20-month moving average. So you do have to give it a little bit of benefit of the doubt. Maybe it just keeps oscillating over here for another 6 months to a year. Who knows exactly, right? But it did have a little bit of a very bullish day today, which really made the monthly candle looking a lot more bullish than it was from yesterday. So sometimes when you make a video before CPI, it could potentially look like it's aged like milk. I do have a longer term horizon. It's not just a day-to-day fluctuation thing. And we still have 14 days, trading days to the month. So we'll see what happens. But so far, it really hasn't been looking good. However, even though yield had gone berserk today, if you look at the S&P 500, it really barely budged. I mean, today there's only like down 1% on S&P 500, on the SPY index. You also have maybe let down less than like 1% for the NASDAQ, for QQQ. What really ended up getting hit though was IWM. It was down a little bit over 2.5%. And here comes into the argument that, hey, IWM is they're the smaller stocks. These are a lot more susceptible to rate environment because they are going to take on a lot more debt because they're smaller companies. They're just going to be a lot more sensitive to the liquidity and to the cycle. If there turns out to be like a low rate environment, generally they're going to thrive. If it's high rate environment, they might struggle a bit, right? Especially since small caps, there's a lot of financials, a lot of smaller banking stocks that are in this index fund over here. So you're really talking about, hey, maybe it's not going to do very well. Rates continue higher for longer. I'm going to show you something to kind of try to dispute that a little bit here. But what you're seeing here, I still think that IWM is very cyclical compared to the bigger index funds. For example, if you look, I'm going to turn off the Bollinger Band here. If you look at the NASDAQ or the S&P 500 funds, SPY and QQQ, you can see that, yeah, it does have a little bit of cyclicality to it. Maybe that's a cycle right there. Maybe that's a cycle right there. Maybe that's a cycle right there. Maybe we've just been through a cycle right here, and now we're starting another cycle right here, right? It just made a little bit of higher high each time a new cycle starts, right? So, and it looks a lot more smoother too. It looks like there's a constant inflow of liquidity that's just going to come into these larger cap stocks for both the SPY and for QQQ. Whereas for the IWM, you really see a lot more of the cyclicality where it really does go up drastically, go down, go up drastically, go down, go up drastically, go down. And it really looks like a very big fluctuation, a big cycle here in between, right? So they're going to be a lot more sensitive in terms of liquidity. The interesting thing is if you look at, you just do some comparison between S&P 500 and the IWM Russell 2000 index fund, you can see something that's very, very striking. So for example, over here, you can see, let's look back at the 2011, 2012, 2013, cycle level over there. You can see the IWM had dipped down over here, formed a little bit of a bottom, and it really took a while for it to really kick into gears to get back into all-time highs and move further above. When it does that, before it does that, it's been about a whole year kind of consolidating underneath this area over here. And when it breaks above, it really becomes very, very impulsive force to break above. Like it opened up a gap over here from January 2013 that still hasn't been closed. And that's how it kind of pushed towards all-time high over here, right? Whereas at that point, like SPY's already been all-time high for quite some time. I mean, it's already been all-time high just more than half a year before that. So, but for IWM, really requires some consolidation to kind of break out above. And when IWM actually ended up breaking above, it went on a very, very impulsive run that happens for another, like a year and a half, maybe even like, if you argue, maybe even like 2 or 3 years over here, right? Whereas for SPY, it did do that, but it start to a little bit, decelerate a little bit over here when IWM really is trying to accelerate over here. So the other cycle did kind of a very, very similar thing. It broke down when underneath over here, and it probably took about, how long did it take? Maybe like 8 or 9 months before you really have this big giant candle over here to push it back above the all-time high. Whereas SPY already, after about like 4 months or so, it already kind of reaches all-time high. And it didn't really need this big giant green candle to kind of push back above all-time high. That's what IWM tends to do. It tends to consolidate underneath this area over here. And then until it doesn't consolidate anymore, it just has a big push to just kind of push it all the way back up through the all-time high. It is just that impulsive for whatever reason. It's just the way the liquidity works, I guess. The next cycle, you have the COVID drop all the way down over here. Right, for IWM, it really took a long time, maybe around 7 or 8 months or so before you're able to break back above the all-time high, and you do so again very impulsively. Each time you're trying to, each time you reach a bottom and you're trying to get back to all-time high, it does that very impulsively. Over here is a gap up. Over here is a big giant green candle. Over here is a big giant green candle. Before that, it tended to consolidate here for quite some time. Here it consolidate for about like 8 months. Here it consolidate for about like several months over here, consolidated for about a whole year over here. So far, we consolidate down here for closer to about 2 years now. So I wonder whether or not the next move is, maybe is either a big giant green candle or maybe a series of larger green candles kind of push back above, because this is not sustainable based on history. Whenever SPY makes an all-time high, usually within a few months or so, you're going to see IWM really catch up in a big way, right? SPY makes all-time high here. A few months later, big giant green candle, right? SPY makes a little bit of all-time high over here in July 2016. In November 2016, like 4 months later, big giant green candle, push it back up to all-time high. Cycle before that, let me see here. Yeah, cycle before that, SPY was making a all-time high really right around here, around March of 2012. And you end up having a big giant gap up over here in January of 2013. So it might have a few months to about a year of lag over here, but generally SPY, the IWM, the small caps, catches up to SPY. When there's a clear increase in liquidity into the system, generally you're going to end up having significant rotation back from the large cap to the small caps. And right now, it's really been lagging behind. Like how far has SPY been making all-time highs for now? Like months number 1, 2, 3, and 4. So it's not conceivable. Maybe over the next month or two, on average, is about a few months, right? Since SPY makes all-time high, IWM catches up in a big way. SPY made all-time high about 4 months ago. Is it conceivable maybe over the next month or two, or even potentially later this month, you might get a big green giant candle to try and push it above all-time high? It's not inconceivable, is it? And also just look at the other indicators that you're seeing over here. Again, I've shown you these indicators before. The first one I like to look at is it's the Black Cat Fund. You continue to have this consolidation sideways over here, whereas you have big giant increase in whale inflow over here. Usually, the last time you see a very similar picture where price kind of goes sideways and increase in whale inflow is followed by some pretty bullish price action that pushes it back above all-time high. Same thing over here. You can see a lot of consolidation over here, but you have an increase in whale flow. Sure enough, it was followed by a big giant green candle here to push it back above all-time high. And same thing back here on this cycle. You see a lot of consolidation that's happening over here when actually you have increased inflow over here, increase inflow over here, up to about 1, 2, 3, and 4 of these green candles. Next thing you know, after you have an increase in inflow over here and price went sideways, you have a big giant gap up over here. That, again, this is like a gap that never closed. So what I'm seeing here is that there are some positive indicators to tell you that, hey, something big might be happening with IWM. It's been consolidating enough. SPY has already made an all-time high for several months now. Generally, this is around the time, maybe next 1 to 3 months is the time when you start to have some pretty bullish price action for IWM to happen, right? The other things to kind of look at, again, I showed you these indicators before. You look at the Ichimoku cloud, 2 things to look at here. One is whenever it bounces from the bottom of the cloud, usually within about a year or so, you're really going to have this pretty impulsive price action to push it back above all-time high, right? Bounce from the bottom, bounce to the top of the cloud, going back to all-time high here, around 12 months or so, bounce from the top of the Ichimoku cloud within a year, generally about like the 9th month, big giant green candle all-time high. Here for COVID, bounce underneath, came back up, bounced from the top of the cloud, right? And then really within like a few months, big green candles. Right now we just bounced from the top of the cloud over here, and there's only been about 1 to 3 months right here above the cloud. So is it conceivable that we're still kind of a little bit in an early stage over here, a little bit early stage over here? Or maybe getting close to where we think we might get a green candle over here, be based on this cycle over here. I think we might be getting a little bit close. I mean, maybe over the next like 1 to 3 months, we might have some pretty bullish price action to kind of push price above the previous all-time high over here. Another thing to look at too is you see that you have a bullish Tenkan Kijun cross that happened over here, and then within about half a year or so, you have a big giant green candle over here with a gap up. You have a bullish Tenkan Kijun cross over here. Within a month or so, you have a big giant green candle over here. Here you have another, bullish Tenkan Kijun cross, and then within about a month or so, you have a big giant green candle over here. We just had a cross not long ago. This cross probably just only happened back in March. Maybe over the next month or 2 or 3, especially if you're able to see this Tenkan Kijun maybe also get caught up and get pushed up further, there's a potential for price to be pretty parabolic within the next month or 3 or so. So that's one indicator to kind of look at. The other one to look at is to look at a Bollinger Band. The Bollinger Band is going to give you the 20-month moving average, and whenever the 20-month moving average really started pointing up here for a while, that's when you start to really build a lot of bullish energy, especially with the Bollinger Band ends up expanding like this. That's when you end up building a lot of bullish energy for price to potentially go, pretty parabolic within about half a year to a year or so to kind of push up. So over here, what happened here? Yeah, trend change, flatten, point up a little bit within about 3 or 4 months, big giant green candle, right? Here, flattened, started to turn positive here. Within about several months or so, big giant green candle pushing up, right? And Bollinger Band is also expanding here a little bit already. Over here, this is a little bit different. It went up a little bit further, but then it flattened. And then as soon as about a few months after it flattened, it looks like it's about to change its trend. Big giant green candle over here. Right now, we're seeing an upsloping 20-month moving average. We're seeing a Bollinger Band expansion over here. So conceivably, there could be some pretty bullish price action that could happen over the next couple of months or so. Now, I'm showing you all these different indicators, look at different cycles. A lot of people, I'm actually reading some comments like, oh, what happened last time? Don't expect that to happen because that was just all because the Fed was printing money like crazy. But what about over here? What about over here? It's not all about just the Fed lowering the rate down to zero and start printing money like crazy. This is cycle related. This is liquidity related. And who else is printing money like crazy right now? China. You're going to have some assets like Bitcoin and S&P 500 and the Nasdaq. They're going to first being absorbed, the liquidity first. And then as they absorb it, you're going to have having some laggards such as the IWM, the small caps. They're going to end up consolidating here for a little bit longer bit of energy before blowing up. And that's exactly what we've seen over the last 3 cycles. And right now we're having a very similar setup on this cycle here as well. Objectively speaking, this is really nothing in terms of the big giant red candle over here, even though it's a little bit of like bearish engulfing candle compared to the month before. But the month is still early. Again, there's only 8 days into the month. You have 14 more trading days before the month close. What this is really looking like it's doing right now is that it simply broke above this big giant range over here that lasted for close to 2 years. Had a breakout and is back testing it. Flipping this resistance level that's been going on for a very long time from resistance to support. That's as far as I'm concerned what the price action here is telling me, which is actually a very constructive set of bullish price action over here. Now, I have one more criticism that is coming my way potentially, is that, I was talking about how the IWM could be rate sensitive, how if rates stay higher for longer, it might end up pushing some downward pressure for IWM. I'm going to show you something here to kind of dispute that a little bit. I'm going to basically try to line this up together with the 2-year yield. Let me see if I can do that here real quick for you. What happens if I line up the 2-year yield together with the IWM? IWM is shown here in the blue. The 2-year yield is shown here in yellow. Now, just right off the bat, if you just look at it, it certainly doesn't really look like yields are necessarily negatively correlated with IWM, does it? You actually have a period of time where yields were just kind of going up and up and up and up and up and up, and IWM is just kind of going up and up and up and up and up. Sure, over here when yields plummeted, this is the great financial crisis, of course, IWM is going to plummet. Since then, you actually have a little bit of a peak right here, which correlates with the peaking of the yield right here. You have a little bit of a lower peak right here, which correlates with that little peak right up here. And then since then, yield has just been kind of flat for, many, many years. And then when it finally had a little bit of a spike up, sure, it had a bit of a downtrend. But the interesting thing is, between the year 2016 all the way to around the year 2018, when IWM was doing very well, when it's going through, this is like cycle 1, 2, 3, and 4, right? And as we're going through cycle number 3 over here, it actually was kind of correlated with yields. Over here is a little bit tricky because it does look like it's a little bit inversely correlated during this particular cycle. But I guess the point of this is to show you that it doesn't always have to be the case. You can have yields going up together with the IWM going up. I guess the most important thing is that there are 2 things that are important. One is cycle, liquidity cycle. The other one is really, maybe it's not yield that matters that much. Maybe it's more global liquidity that matters more. And right now you have a lot of sources of money printing, including our own government, passing all these like $1.4 trillion bills, including China, who's really printing money like crazy and trying to save their own economy. So there are a lot of things that are coming into play to get liquidity into S&P 500, which had recently just made an all-time high just a few months ago. Nasdaq, same thing. And Bitcoin is doing the same thing. So what you're really looking at is more global liquidity. Sure, yields matter, but they're not the end-all be-all. And the IWM doesn't necessarily have to listen to yields, although I still get the feeling that it might start to be a little bit more exhausted. We'll see how this month closes. I do want to show you one more thing here on the 2-year yield. I'm going to turn it back into candles over here, and I'm going to change it from monthly to weekly. I do want to show you one thing over here, which is the RSI. It does get me a little bit concerned, because if you do draw a trend line that goes from over here and goes over here, it does look like we're at risk for having a potential breakout over here with RSI, when this has been a very, very strong downward trend line that's been going back to the beginning of 2022. We're re-challenging this trend line over here, although it does look like the whole trend looks very, very exhausted. But if the RSI gets broken here, we'll see. I mean, I don't want to be super bullish on yields right when RSI is right at resistance, and if we get too early, maybe yields would drop back down, and maybe it's going to get back down underneath this RSI trend line. Maybe it's just going to get rejected and go down from here. We'll see what happens. I did see this, and sometimes you're just going to have to take it in a grain of salt with any kind of prediction the day before big catalyst comes in. But I do want to say one last message is that even though today was, a pretty big piece of data with CPI supposed to be like big news, inflation is still not, doing very well here. I do want to say this though. If it was that big of a deal, how come SPY closed today with a green candle? And the volume is not that impressive, to be honest with you. How come the QQQ closed with a green candle? And the volume over here is actually not that impressive, really. If anything, is a green candle, this green buying volume, maybe there's some early sell-off that actually ended up getting bought over here. We're not closing, in a green candle over here. You do have a higher volume over here on IWM. I do think that there's a lot, of people who, getting scared because of rates, things like that. And these are just short-term traders doing short-term things. I think that they were looking for yields to go up anyway as an excuse to kind of, correct the IWM. Because I still think that if you look at it weekly, I still think that this does look more like a high volume breakout with a low volume backtest. That's still what it looks like over here to me. Anyway, it's only Wednesday. I just want to share you my thoughts here. I hope this helps you kind of think in terms of how I think, even though how I think may not necessarily be the accurate way to think. But at least I'm trying to show you my logic and my thoughts in terms of how I'm being positioned. And I am not really that scared by the price action of IWM. If anything, I just kind of show you on the monthly chart here, compare to previous cycle. I think we're at a pretty interesting juncture of the last cycle. I mean, kind of close to here. I think we might be kind of close to here. And there are also other things to kind of show you that that's what I'm thinking, because you are seeing a little bit of a hidden bullish divergence over here. If you look over here, price kind of just kept going up, but you're starting up RSI really kind of cool down sideways over here. I think we're seeing a very, very similar picture where price just kind of going up, and you're having a little bit of a hidden divergence, hidden bullish divergence, where RSI is kind of just resetting before its next big move. We might be getting pretty close. It might take another 1 to 3 months before something more impulsive happens, but it does look like we might be getting pretty close. Now, nothing's for certain. It's just one cast opinion. Please feel free to disagree. There's no right, there's no wrong. We're all just kind of doing our best to speculate based on the available information that we have. But thank you very much for listening. Have a good one. Bye.